Hey everybody, how you doing? This is your pal Uncle Bruce with the Stock Markets with Bruce. I have a channel on YouTube that I'm known for following a number of different stocks that I like. I talk about how you can write options and make money on the markets, and I try to explain it all in plain English. That's the tricky part of my job here, is to try to explain things in plain English. And today, this is Sunday, February the 4th, 2024, and I want to talk to you about a company called Rocket Lab, symbol RKLB. I want to talk to you about Rocket Lab. I follow Rocket Lab with my viewers, have been since 2021. They used to be a privately held company. They became public when they took over a SPAC. Shares came out at $10 a share. They went up, they went down, they've been all around. And lately they've been in the 4, 5, 6 neighborhood, kind of. Until last week when something dramatic happened. Now let me show you something here, just a little recap. This is a 5-day chart on Rocket Lab, and you'll note that let me kind of shift this over here like this so you can see me down here. Okay, so you can note here on the shares, the chart, it starts on Monday. That would be what, right up here. Monday is where the chart starts there, and you can see where it was in that 5 ballpark, above or below, and that was Tuesday and Wednesday until late Wednesday and Thursday. Look out. It looks like the bottom dropped out of the market, and it's now sitting at 4. It tried a little rally on Thursday. It didn't last, and now it's around $4 a share. Closed at 402, as you can see, the after hours trade there. This was Friday's activity for February the 2nd. An announcement had come out on Thursday and clarified on Friday, and I'll tell you all about it. And just note here that the shares traded on Friday, 47.8 million shares. On Thursday, the shares traded 61.5 million, and normally 7 million, 6 million, 5 million a day. This is huge. The day before, on Wednesday, by the way, going back to this chart, Wednesday, when the stock was around $5 a share, the volume that day, 5.7 million shares. And that was at that time a typical day for Rocket Lab. Now, what did they do? Well, they came out with this announcement right here. Rocket Lab announces pricing of an upsized offering of $300 million in convertible secured notes. Okay. Why would the stock go down $1 a share, 20%, just on this kind of an announcement? And what is going to happen here going forward? And I have been going over this deal. I've been reading this deal, this offer. I have been going into the minutia of the deal, and I have come up with, I think, kind of a reasonable explanation as to what's going on and how you guys could make yourself a bunch of money. First of all, I like the company Rocket Lab. I like their concept. They build and launch satellites into low Earth orbits. So if you are a public company, or you're a company, a government, you're an organization, and you need direct satellite access for data, you could consider, hiring a satellite operator to handle all your data and whatever. But if you want it to be in your own system and communication with only your own servers and so on for security reasons, governments really like this, well, then you will launch a series of satellites in low Earth orbit, and around the world will be a string pearl of satellites bouncing information back and forth to your servers, and you can keep your data encrypted and private and blah, blah, blah. Okay. That's what Rocket Lab does. Rocket Lab, you hire Rocket Lab to launch satellites up into space. And they have got billions of dollars of orders on their books. Little old Rocket Lab here is a company about to turn profits now. They have been around for a number of years, and they have built up their following. They've built up their practice. They've built up their reputation as a reliable launcher of satellites, low Earth orbit satellites, since 2006 is when they started up. And here we are in 2024. They're about to start making money. they secured a pretty good contract for their own outfit, a $515 million contract less than a month ago from NASA. That's the largest contract they've ever signed with anybody. And I think this is only a harbinger of things to come. But fair enough. Now, look, I think the shares have the potential to go up substantially. I felt that before we saw this, before we saw the shares take a dump on Thursday. I have felt that upwards of $10 a share is much more likely for this company stock as the stock market as a whole figures out. These guys are about to make money. Their cash flow going to go cash flow positive, and SpaceX is getting all the hype and all the love from the brokerage community. These guys are about to get that kind of love too, especially when you turn a profit. They're already a public company. SpaceX is not. Okay. Well, Thursday, the company, or let me go back one more step. Wednesday late, the company made a press release and issued a statement where they said, we are releasing early our finances. We're releasing our fourth quarter finances a little early right now on a preliminary basis to give you kind of a handle on where we're at and what we're doing and what's going on. And everyone's asking why do we have to give a crap about this? The fourth quarter was December 31. This is the end of January. This was January 31st. Why don't we just wait until sometime in February when you release your financials anyway? Nobody knew, because at the time the company came out with their guesstimates on their earnings and approximate range of how much money they're going to make and whatnot. They wanted to say to the street as a whole, here's where we're at, here's where we think we're at, and we'll see you in a few weeks when we release the financials. Well, lo and behold, the next morning, the hammer comes down. The stock drops to $4 with an announcement from the company that they're doing this. They're raising $300 million on a convertible senior note. It was supposed to be $275 million. They upped it to $300 million. They gave the broker an option for $55 million more. It's a $355 million deal to raise fresh cash for the company. The company wants to use $40 million of that money to knock off a loan that they have against equipment that they have acquired. I believe this is the equipment they bought from the auctioneer that was auctioning off Virgin Orbit's assets. Virgin Orbit went broke, delisted, bankruptcy, and all the equipment that they had, which is hundreds of millions of dollars of specialized rocket building equipment. The Rocket Lab bought it for $40-50 million, 10 cents on the dollar, if that. They took a loan out on it. They're now going to knock that loan off. With this proceeds here, they'll have no debt whatsoever. They'll probably be sitting on $500 million cash. But on top of that, the company decided, well, we're going to issue these notes, and the notes are going to be purchased by institutional investors, sophisticated investors, and we're going to give them an opportunity to get a stake in the company. By giving us $355 million in total cash, we're going to allow them to buy stock from us at $5.13 a share over the 5-year lifespan of this deal. And if the shares go higher than 30% more than the $5.13 price, we have the right to force the conversion upon these guys. Well, I'm going to ask you this question. Look, you give me $355 million, and I'll give you stock at $5.13 a share. If the shares are trading at $6.67 or higher, would you mind that deal? I don't think you'd mind at all. Stock's at $6.67, and you're giving me $355 million worth of stock at $5.13. I'm up 30% right now on this stock. I can just write options on this stock now. If I follow Uncle Bruce on his stock market channel, I could write options at $7.50, $8 and take premiums in. Fantastic deal. Because if the shares have gone up to $6.67 or higher, there must be something good going on with the company. Well, what good could be going on with the company? Well, a company with $500 million additional, in total cash on hand can go a long way to grow their business, grow their factory production capabilities to launch more satellites with rockets faster, sooner than without 500 million in cash. So, of course, lenders are saying, yeah, sure, here's 355 million. Take the money, knock yourself out, build rockets, build satellites. You got billions in back orders. Get those rockets up there, cash those checks from these guys. You're making money now. Yeah, here's $355 million. I mean, we're not stupid, you know. We got 355 million because we're kind of smart. We're doing the money, and we don't mind owning shares of your company down the road at 5.13 a share, knowing you came out at 10. You were once 15 anyway. You're going to go beyond that. So we're long-termers. It's all good. But the deal is juicier than that. And I'm sitting here telling you, you got to buy this stock right now. And you're asking me why? Why should I buy this stock, Uncle Bruce? It's $3.85 to $4 a share, close to $4.02. Why should I buy this paper? How is this company going to deliver stock at $5.13 a share other than printing it from their treasury? And it's going to be about 69 million shares. They have to print 69 million shares from their treasury, which dilutes the shareholders. Why would I want to be involved with a deal like that? I don't want to be in a dilution scenario with these guys. That's going to hold the stock down. Don't you think, Bruce? You've taught me this, Bruce. I've been watching you, and you keep talking about dilution factors and everything else. Well, here's a couple little ditties for you. There are 485 million shares out there now. 294 million trade freely. The rest are restricted because they're held by insiders and management and so on. The public company doesn't want to issue any stock from the treasury. They don't want to issue any stock from the treasury. They would like to make this deal work so that they can deliver 69 million shares to these lenders in lieu of a $355 million cash injection into the treasury. And they don't want to issue any stock. Well, how the hell are you going to do that? I mean, what kind of shenanigans are we talking about? Well, we're talking about some other high-end falutin shenanigans. We're talking about something called a cap call transaction deal. And you're looking at me going, what the hell is a cap call transaction? Because I was asking myself, what the hell is a cap call transaction all about? And I found one on Uber. Uber did a cap call transaction on $1.7 billion of a financing deal last November. And now Rocket Lab wants to do one. And I'm sure there are others out there. And in simple, plain English, here's what's going on. On Tuesday, this deal closes. And Rocket Lab, by Tuesday night, by Wednesday morning, they will have $355 million come into their coffers. They will pay out the commission to the brokers who are putting it together for them, probably $10 million. And they're going to now buy a call option on their own stock. They're going to buy a call option on their stock. It's going to cost them $36.5 million. Now, you folks who watch me all the time, we talk options here all the time. We talk about writing options all the time. And why would someone write a call option and sell it to Rocket Lab? What's the term of the deal? Like, what kind of option are we talking about? Well, we're talking about a 5-year option. Well, there's no such thing as a stock option on the open market. There are no leaps good for 5 years. Usually we see contracts go to 2025, 2026, 2 years from now. This is a 2029 contract. This runs the same amount of time that this $355 million loan is running for. This is a $355 million loan by institutional investors for 5 years. They're getting paid 4.25% interest on their money every year that this loan is out there for, unless the public company hands over 69 million shares at $5.13 a share to make the loan go away and stop the interest payments. Well, how's the company going to do that? To get 69 million shares on the open market, they'd have to buy them. Well, that's going to cost them $350+ million. They don't have that money. They just borrowed $350. Why would they now buy the stock? Makes no sense. Normally, a public company would print 69 million shares and hand them the stock, but that dilutes the company, right? We don't want that. So Rocket Lab and their broker worked out a deal. And they said to the broker, and the broker said to the public company, give us $36.5 million and we'll write you a stock option. You'll have now written a stock option, a call option. And you've purchased an option. We'll write an option to you, the public company, give us $36.5 million. And I think the way this deal works, it's something like an option where the public company could buy 140 million shares, double the 70 million roughly we're talking about here. 140 million shares at $5.13 a share from the broker. The broker, in the meantime, is sitting there going, okay, we have to cough up 140 million shares to the public company at $5.13 a share if they exercise the option. But they're not going to exercise the option if the stock's trading at 402 because, the stock market went like that. And I think the stock was dropped on purpose by the broker down to 402. They just sold stock into the market and dropped the market to 402. And now you can buy all you want at 402 a share because they're shorting it. You're not going to move that market above 402. And what's happened since Thursday? We've had 61 million shares trade on Thursday between 381 and 402-ish, and 47 million on Friday under 402, 402 or less. That's 108 million shares that have already turned over from people panicked and wondering, oh, the world is coming to an end on Rocket Lab. They're diluting their company. It's game over. They're borrowing money to survive. They're never going to make it. On and on and on go the tears of sorrow. The brokerage firm's sitting there going, I'll buy all you got. We'll not let it go over 402. We'll buy up all we can get. And I'm thinking already, they've got 80 million shares, 70, 80 million of these shares. Kathy Wood's investment funds bought $4.7 million worth of stock at about a $4 average on Thursday. She's loading up on the stock because she knows something that I think I've now figured out that I want to share with you. If Rocket Lab will actually deliver 69 million, 70 million shares to their bankers, and the bankers will say, you don't owe us any money. Yeah, we'll take the paper, all is well. That's at $5.13 a share. They can't do it now. The stock's at $4. So how in the world can Rocket Lab deliver stock at $5.13 if it's only trading at $4 and they don't want to print it? The stock has to go above $5.13. As a matter of fact, there's a clause in the deal that says that if the shares go up 30% higher than $5.13, $6.67 or higher, a conversion can be mounted. The company can go to the lenders and say, we're taking you out. The stock's trading over 667. We're going to give you stock valued at 513 for the $355 million. And we don't owe you any money. You got stock. It's trading at 667 or higher. Knock yourself out. But this transaction I've told you about, this $36.5 million deal between the company, Rocket Lab, and their underwriter, is a $36.5 million deal. It's called a cap call transaction, which means the deal can only last up until 804 a share. That's the upper cap of this call option. So if the shares go up in value on the open market, Rocket Lab has a right to exercise a call option at $5.13 a share. And if the stock goes higher than that, the option is worth more than what they paid for it. I mean, 140, I'm guessing 140 million shares. If the stock goes to $6.13 a share, then the contract has a $1 book value. It's good for 5 years, obviously, so there'll be some premium on it, but it's not an open trading, free trading contract. You can't buy this contract. You can only buy the stock. But if the shares go to 804, the maximum price that the stock can go to under this cap call transaction, our friends at Rocket Lab would be in a position to buy 140 million shares at $5.13 a share that are now trading at $8.04 a share. And there would be a substantial profit in that deal. In effect, the book value of the contract is $2.89 a share times how many shares Rocket Lab can buy. The broker has already been buying up the stock at under 402 a share to deliver stock at 513 to the public company. They got paid $36 million in cash up front in money, actual dollars, and they're out there buying up the stock, and they can do it on their own margin account. And this brokerage firm is probably one of the larger firms in New York and do the whole deal with chump change they've got lying around. It's not a big deal to them. At the end of the day, and I don't know when the end of the day is, it could be a 5-year arrangement. It could be just a 1-year deal that in a year from now, the shares are trading at $8.10 a share, $8.50 a share. And the company and the broker and the lenders all agree, let's shut this thing down. We're all happy here. We all love each other. And Rocket Lab's doing great. And we all want to be shareholders, and we all want to shut this deal down. So let's get rid of this $350 million loan, turn it into stock, and let everybody do whatever they want to do. Well, the shares have to trade at least 40 consecutive days or something like that, or 30 consecutive days above 670, 667, and there have to be other provisions coming through. But at the end of the day, safe to say, the shares are trading at 803, 804, 810. Everyone's motivated to shut this deal down because the stock's going to go even higher based on their fantastic results, again, a year from now or longer. The public company needs to get their hands on 69 million shares. And at $513 a share, that's a lot of money. It's $355 million. They have to make a profit on their option of more than $355 million. They have to make a profit not only of $355 million, they have to add another $36 million to that, the cost of the contract. Oh, and then if it's a 1-year time frame, they need $15 million more. Why? Because they've been paying interest of 4.25% on the $355 million for a year. That's $15 million a year in interest. So you add 15 to 36 to 355, you come up with $406 million. The shares trade at $8 a share. And they can buy 140 million shares at 513, 289 differential in price times 140 million shares, $405 million odd dollars in profits, which allows the company to sell the contract to the broker. The broker says, I owe you $405 million. And the company says, well, give it to us in stock and cash. Give us 69 million shares, which we'll just turn around and give to our lenders, and they're gone. And the rest will cover the cost of the option that we got into, the interest on the money. And if this is a 5-year window, this thing ends in 5 years, it's $75 million in interest, plus $36 million for the option, 100 and something million plus 355 is 450. You can see how this all works out. The public company comes out of it like this. They raised $355 million in fresh cash. They didn't print a single share certificate to do it. They paid off the loan in full using stock that they got at $513 a share that was trading at much more than that through a call option. That's as simple as I can put it. The public company bought an option on their own stock through an underwriter to buy the stock at $513 a share. They made enough money on that option over $513 a share to turn around, pay off the $355 loan with paper that they exercised, and the rest recouped their interest and the cost of doing this entire deal, which means the upfront commission charge to raise the money, the interest on carrying the loan for up to 5 years, and the $36.5 million price for the contract itself. The public company is $355 million richer in dollars, and there's just as many shares outstanding then as there are now. But one thing has changed, and that is, I just said a few minutes ago before at the beginning of this video, there are 294 million shares in the public's hands right now. That will be reduced by 70 million shares. Why? Because those shares are now held by institutional investors who put up the 355. And it's possible that they sell the stock at $8. It's possible. But it's also possible that they don't sell it at $8. They go, oh, no, we're not selling Rocket Lab at $8 a share. You out of your mind? We only paid $5.13 for it when we issued this loan. Now we're worth $8, and these guys are making a ton of money with a whole bunch of additional contracts. Because 5 years from now, how big will Rocket Lab be? Could this be a stock on the way to $12 or $15? I don't know. But for you who are watching me rant and rant and rant about this Rocket Lab deal, I am telling you that you need to buy Rocket Lab first thing Monday morning. Under this 402 level that's being held here artificially, you have to have stock in Rocket Lab. Now, you don't have to buy stock in Rocket Lab to make money in Rocket Lab. You could actually write cash secured puts on Rocket Lab. You could do that. For example, if you've got as little as $500 in your hot little fingers right now, or access to $500 with regards to marginability on your account, you could write a $5 cash secured put on your Rocket Lab money. So it's $500. You could write a January 2026 cash secured put on Rocket Lab. Now the $5 cash secured put on Friday night, the last trade on that stock, that option, was about $2.02 a contract. Now it's worth $1 because the stock's sitting at $4 and this is a $5 put, so it has $1 book value to it, but it's also got $1 premium to it. So you put up $500 and collect $200. That's 40% on your money, by the way. If you're forced to buy the stock, if someone puts it to you, you're buying it for $3. You're even happier if you get the stock for $3 by putting up $500. If the shares go to $5 a share in the next month or two with this 402 cap removed, which is as of Tuesday night, that's when this deal closes. So starting Wednesday, there's no limit to how high the shares can go now. If they go to $5 next week, let's just say back to where they were a week ago, this put contract is worthless. Because at $5 a share, people won't sell it to you for $5. They can sell it in the open market for $5. You have got a contract that you received $2 for that is worthless other than its time value, 23 months and counting. The first $1 move up on the stock to $5 will probably drop this contract by 60 cents a contract. It'll go down to $1.40 immediately. So you're already at 60 cents a share. You can just sit here like this with your arms folded and say, I put up $500. I put up $1,000. I put up $5,000. I wrote, 1, 2, 10 of these things. I got 40% back on my money. I got 40% back, $200 for every $500 I put up. I can do whatever I want with that $200. I don't have to wait 2 years to touch that money. I can use that money right now and buy Rocket Lab stock with that $200. I wrote 10 of these contracts. I had $5,000. I got $2,000 in my hot little hands right now. I can now buy $2,000 worth of Rocket Lab at $4 a share. Limited time offer. That's 500 shares. So I'm long 500 shares, and I have 1,000 shares represented on a put contract. And if the shares go to $5 or $5.50 or $6, even under that $6.67 magic price of conversion, these puts are worthless. And I've got stock at $4. That's now $6.50 a share. Hello, I'm up $2.50 on this stock. I've got a $2 contract that's now probably trading at 80 cents. I'm winning on both ends of this deal. You don't have to write 5s. You can write 4s. These are at the money put contracts for Jan 26. Again, I'm just going out as far as I can go. Those were at the bell 140 on Friday. For January 2025, a year sooner, the $4 contracts closed at about 92 cents, and the $5 contracts closed at about $1.55, just to give you an idea of the potential. So if you don't want to wait till 2026 for the contracts to expire, you only wait till January 2025, which is 13 months from now. The 4s will bring you right now 92 cents, and that's all premium. There's no book value in this contract. That 92 will eviscerate to 0 if the stock stays at 4 or higher over the next year. The 5s are like I say, 155, which means you're paying 345 if you're exercised on those contracts. This is a license to steal money. This is why Kathy Woods bought $4.7 million worth of stock. And frankly, I don't know why she didn't buy more. I don't know. Now, it's possible that her funds already have shares of Rocket Lab and other funds of hers, and collectively she's got, a huge whack of paper. I don't know. And she may be bringing her average from that 6 level to the 5 level by doing this move that she just made. I don't know. But if she's sitting back like I am going, this is going to $8. The stock could go to $8. She's going, yeah, bring it on, baby. I got a $4, I got a $6 average. Go to $8. I'm up $2 on millions of shares. I'm saying to you folks, you either buy the stock at this 4 level, 395, whatever it's trading at, while you can, and enjoy an upside move, or you write cash secured puts and enjoy a nice return on your money with an upside move. Up to you how you want to do it. But this, in my opinion, is a license to steal. Going back one little thing, I want to go back to Uber. I mentioned Uber. When Uber did their deal on their financial arrangement, the shares of Uber, I will show you if you will just bear with me here. It's kind of live and kind of a recorded show here. On Uber, we were sitting at, here we are, 3 months ago, November, right here. Yeah, we were as low as on October the 26th, the shares were $40 a share. On November the 3rd, they were $47 a share. November the 8th, they were $49.50 a share. By November 16th, they were $54 a share. This deal was done in the 40s. This is a $1.7 billion bond offering, senior note offering, convertible into Uber stock at $72 a share with a max call, a capped call transaction at 90, I think 94. Stock right now, $68 a share. This is Uber stock right here, $68 a share Friday night. And this is a 6-month chart back in August of last year in the 40s and 50s. And you can see it here, right up here at the top. This is Friday close, just under 68, or right around $68 a share. And the conversion price of the deal on the cap call transaction, $72 a share, $72.50 something. That one worked out really well for everybody who bought that stock in the 40s, the mid 40s, when that deal was announced. I'm saying to you kids, Rocket Lab is $4.02 a share. And this is a deal at $5.13 a share. There's a guaranteed $1.13 profit there. And you know the company's going to convert the stock at $5.13. They're not going to pay back the money in cash. They're going to pay the loan back in stock. To make it work for the company, the stock can't be $5.13. It can't be $6.67. It has to be $8. There's enough profit in that option contract at $8 a share for the company to pay off a $350 million loan, plus the cost of the option, plus the interest to make the deal work, and the fees. You can run this thing from 4 to 8 yourself. Just be a shareholder or be a cash secured put writer. You could theoretically, you could write cash secured puts out to the January 26 range. You could write $12 calls, or puts. You can write $12 puts. You can write $10 puts. You can write $7 puts. A $7 put closed at $3.52 on Friday night, which means you're buying the stock for $3.50 if you get exercised. The stock goes to $8. That $7 put is worthless. You keep all $3.50. Now, that's, of course, Jan 26. Even if you're buying back at $1, you keep $2.50. That takes 6 months, 8 months, a year. Nice return on your money. There you go. A nice little 33-minute video for you to let you digest this one. I'll be talking about this tomorrow on my live show, Stock Markets with Bruce, every morning at 8 o'clock for Gold Bagel members. Become one of those. 8:30 for the rest of you who are not members. Come on and join me. We'll be talking about this Rocket Lab deal tomorrow in this kind of detail. This is a deal, a bargain. Buy the stock, write cash secured puts, enjoy yourself. I wouldn't recommend buying calls because this might take a few years to fully solidify, but it might take a few weeks. And with buying calls, you are running the problem with the time issue. It's against you. By writing cash secured puts, the time is on your side. I like this trade better. I hope you enjoyed this video. I hope you digested it all right. If If you have any other questions, just send me an email. Let me know what you think. But otherwise, I'll catch up with you guys tomorrow, first thing in the morning at 8:30 Eastern Time. There's my email address right there. You can see that down below. If you want to learn how to write stock options, head over to my website and learn all about how to write options and get rich, because the option traders are going to hand you the money hand over fist. It's unbelievable. Thank you all for joining me today. The best to all of you, and we'll see you tomorrow. Bye for now.